This stock used to be viewed as the underdog in semiconductors. Now, it may be positioning itself to become one of the most important AI infrastructure companies in the world. And if the current trajectory continues, the upside over the next 3 to 5 years could be far larger than most investors are prepared for. Because right now the market still thinks this story is mostly about competing with NVIDIA, but I think that completely misses what's actually happening underneath the surface. Today we're looking at advanced micro devices, AMD, and my long-term outlook on this company is extremely bullish. Over the next 3 to 5 years, my current framework looks like this. Bear case, roughly $400 to $600. Base case, roughly $900 to $1,400. Bull case, over $2,000. That sounds aggressive, but AMD is no longer being valued like a normal, cyclical chip company. The market is increasingly viewing AMD as foundational AI infrastructure, and that changes everything. The first thing investors need to understand is that the AI market itself is becoming much bigger than expected. AMD recently raised its expectations for the server CPU market dramatically. The company now expects the market to grow more than 35% annually through 2030, with total addressable market potential exceeding $120 billion. That's a massive shift from prior expectations, and it suggests something very important. The next AI boom may not just be about GPUs, it may also be about inference, orchestration, and AI agents running continuously across enterprise systems. That requires enormous compute infrastructure, and that infrastructure relies heavily on CPUs. This is where I think most investors are underestimating AMD. Everyone focuses on NVIDIA competition. But the real long-term opportunity may actually be AMD's dominance in high-performance x86 server CPUs through ePYC. Because AI systems don't just need accelerators, they need orchestration infrastructure, they need servers managing inference workloads, coordinating memory, handling enterprise compute tasks, and running AI agents at scale. And AMD is becoming deeply embedded in that ecosystem. Now let's talk about the numbers. Because the numbers are starting to become very difficult to ignore, AMD's data center revenue recently grew 57% year over year. Quarterly data center revenue reached approximately $5.8 billion, and AI GPU shipments continue ramping aggressively. Lisa Su also stated that AMD believes data center revenue can grow more than 60% annually over the next 3 to 5 years. If that actually happens, AMD's earnings power changes completely. Now let's frame this using my fallen growth valuation model. I break every company into 3 drivers: revenue growth, margins, market multiple, and AMD scores extremely high across all 3 potential categories. First, revenue growth. If AI infrastructure demand continues expanding globally, AMD could realistically sustain revenue growth in the 25% to 35% annual range for years, not quarters, years. That's the type of compounding that creates trillion-dollar outcomes. Second, margins. As AMD scales data center and AI products, its mix shifts towards significantly higher margin revenue streams. That means operating leverage improves over time, and that's critical because semiconductors become dramatically more valuable when growth and margins expand simultaneously. Third, the multiple. This is where the market transformation happens. AMD used to trade like a cyclical semiconductor stock. Now it's increasingly being valued more like strategic AI infrastructure. That's a completely different category. And if the market fully embraces AMD as one of the core compute providers for artificial intelligence, the valuation ceiling becomes far higher than most investors currently imagine. So let's walk through the scenarios. In the bear case, AI spending slows. NVIDIA remains dominant, and valuation multiples compress. Even in that environment, AMD could still potentially trade in the $400 to $600 range over the next several years due to long-term data center growth. In the base case, AMD becomes firmly established as the #2 AI compute platform globally. Server CPU dominance expands, AI GPU market share steadily rises, margins continue improving, and revenue compounds aggressively. In that scenario, I believe AMD has a realistic path toward $900 to $1,400 over the next 3 to 5 years. But the bull case is where things become truly massive. For AMD to move toward $2,000 or higher, several things need to happen. Successful MI400 and MI500 execution, Major inference market share gains. Hyperscaler adoption accelerating. AI infrastructure demand remaining explosive through 2030. And most importantly, the market beginning to view AMD strategically the same way it now views NVIDIA. Because if AMD becomes essential to global AI infrastructure, the valuation math changes dramatically. Now, obviously, the risks here are still substantial. NVIDIA remains dominant. AI spending could slow. Semiconductor cycles are notoriously volatile, and even great companies can experience valuation compression during macro downturns. Geopolitical risk and export restrictions also matter significantly in semiconductors. So this stock will likely remain extremely volatile, even if the long-term trend stays bullish. But my overall view is simple. I think AMD has a real path to becoming one of the most important semiconductor companies in the world, one of the core infrastructure providers for AI, and potentially a multi-trillion-dollar company over the next decade. And yes, that sounds extreme today, but years ago, NVIDIA's move sounded extreme too. The market always underestimates transformational infrastructure shifts in the early stages, and I think artificial intelligence is creating one of the biggest infrastructure shifts we've seen in decades. If you want to see which company's AI is flagging before Wall Street fully understands the story, follow the Fallen Growth series.